It was a brick house that didn't need a lot of maintenance and also didn't need much renovating, which was perfect for what I was looking for at the time.
When Laura Christopher bought this house in the Queensland town of Ipswich, she negotiated for the first 5 years of her home loan to be interest only.
The fact that the repayments were a lot less than a principal and interest mortgage was very attractive to me.
When Laura's interest-only period ran out in 2016, she had to start paying back the principal as well as the interest. Her loan repayments jumped nearly $5,000 a year.
Oh, it caused me great deals of stress and anxiety. You're just like, I don't know where I'm going to get the money from to try and keep things going.
She put the house on the market last year but couldn't get the price she wanted.
The offers were even less than what I had bought the house for 7 years ago. By the end of the 3 months of the contract, it got to the point where I decided just to take the house off the market, go back to work full time, so I could at least keep my asset.
What do you want more muffins, Mummy?
Laura is still struggling with the repayments even after 3 interest rate cuts by the Reserve Bank this year.
My plan going forward is to try and get a promotion to earn more money. That's the plan.
The Reserve Bank says about $120 billion worth of interest-only mortgages are resetting each year. Mortgage holders will see their repayments go up by an average $7,000 a year if those loans become principal and interest.
The step up in periodical repayments can be of the order of between 30 and 40%. In other words, it's the equivalent, as far as a borrower's cash flow is concerned, of a significant increase in interest rates. And that, of course, can be disruptive if the borrower doesn't have the resources to meet those additional repayments.
Economist Saul Eslake says so far that hasn't caused a surge in loan defaults, but he worries the worst may be yet to come.
It could be that the people for whom the transition is going to be most difficult in the cohort that are yet to make the transition, whereas those who could do it comfortably did it sooner rather than later. And indeed, some of the Reserve Bank work suggests that a number of people have transitioned ahead of the legal requirement to do so. So we'll have to wait and see how difficult it is for the remainder.
Retired police officers Bronwyn Dwight and husband Peter are enjoying retirement as grey nomads, exploring the countryside in their caravan.
We just loved it, going around doing the big lap, and we thought, gosh, it's such a pain to have to think about going back to work. So we did our financial sums and looked at everything else that needed to be looked at, and we made the decision to retire.
Peter and Bronwyn have built up a large property portfolio to fund their retirement.
After I got interested in property investing, I decided to create a goal, to make a goal for 30 properties. So in the end, in the last 5 years, I think we got up to 16 income-producing properties.
It's the properties that are enabling us to have the lifestyle that we've got, so it is very, very important.
Most of their properties are mortgaged with interest-only loans.
We went with interest-only mortgages because they provide a cash flow. You're not paying down a loan as such with a lot of principal. You're paying just interest only, and that provides, as I said, cash flow to help us live for the tight times with family and raising the kids.
They took out a 30-year mortgage on one of their properties with the Commonwealth Bank. For the first 15 years, they only paid interest on that loan. Then the bank wouldn't extend the interest-only period, so they faced having to repay the principal in just 15 years.
I think if we keep pressing the level there, if we don't get that.
If it was going to revert to the P&I, on the current interest rate that they had, our repayments would have gone from about the $2,000 per month up to close to $7,000 a month, which just wouldn't have been financially viable for us to maintain.
Peter and Bronwyn shopped around and found a lender willing to let them stay on interest only.
It was a really frustrating process, but yes, I feel for other people having to go through that same process.
And the issue with the landlord's insurance on this one.
But Peter and Bronwyn have many other interest-only loans that may convert to principal and interest over the next few years.
Get that to work. We've got 5 lenders and 8 loans. So in the next, this year, for instance, there's 2 more to go. And then over the next 3 to 4 years, they'll begin to come out progressively, different loans as we've got them in time. And they'll be asking us to go back to principal and interest, most likely.
I would suggest that there are a lot of people who are facing the same difficulties that Peter and I have just been facing and continue to face. If they're not thinking about it and they're not preparing themselves and they're not working it through, they're going to find themselves really struggling.
But they remain confident in property as their nest egg.
So I think the demand for housing is still very, very strong, particularly in Australia, which is where our holdings are. So I think it's not really that much of a concern.
But with the local economy weak and global economic conditions uncertain, others fear there could be a painful reckoning.
Yes, I think so. Well, by and large, it's true that if unemployment stays low and interest rates remain low or even fall further, then there's no compelling reason why we should see a wave of defaults or forced sales. But if there were to be some other external shock, there is a small group of people who may find themselves in difficulty, and whether as owner-occupiers or investors, they could become forced sellers. And if property market conditions were to deteriorate again, then that would represent an additional source of downward pressure on prices.
Hi, I'm Lee Sales. Thanks for watching this story. If you'd like to watch more of 730's stories, they are on the left of your screen. And tap on the button below to subscribe and get the latest from ABC News.